Hey guys, it's Mr. Roxy here. So I made a video yesterday. Yesterday was April the 2nd. It was Friday. And I used my energy portfolio as an example of talking about to talk about rebalancing your portfolio and at the end of the day creating a tax event. Because if you sell anything for a profit, obviously you're going to create a tax event. And I wanted to talk a little bit about that and tax harvesting. So just in terms of setting the stage, I'm pretty much sort of what you would loosely refer to as a typical long investor. I don't really sell. I'm on the buy side as a general rule. It's I like holding good investments for a long period of time, so I don't really typically exit my positions. Now, of course, for those of you who've been following me, you'll know that I often kind of tongue-in-cheek joke about the positions as being one Maserati or two Maseratis or whatever the case might be. And yesterday I talked about selling equities like energy transfer in order to illustrate my point, but then I would generate a profit. And then I would sell some expensive OXY, which I had previously bought at a price of around $46, $47 for a loss in order to do some tax harvesting. Um, I don't really plan to do any of those. I did share some of the concerns that I have with some of the stocks, but you guys asked me some really good questions, so I thought I'll respond to them, and we can talk a little bit about some of these questions that you had posed, and then just the general discussion, right? So what I'm going to do, in addition to just talking you kind of through part two of the same discussion and showing you the balance of my portfolio, I thought to also touch on some of the comments and discussion that was going on in the comments section. Interesting stuff, and thank you all so much for contributing to our channel and making it vibrant and interesting. Chess Dad said he saw an interesting proposal by Berkshire's Energy Group. Berkshire's Energy Group plans to build 10 power plants in Texas, running on-site natural gas to act as backup power for the Texas grid. Brendan Cherry responded and said, Elon is building some giant battery farms in Texas too. Our power rates fluctuate based on supply and demand minute by minute. So we're going to see what happens with this one. This is kind of interesting news, and we'll have to pay close attention to make sure that we find out what's going on. My old friend Vince Gupta, he's not really old, he's younger than me. So my young friend Vince Gupta sent me a note via LinkedIn, I think. And he said, I was wondering if you can still buy OXY warrants. The answer is yes, they have their own QSIP. So Vince and anyone else who's interested, you can buy the OXY warrants and you would be eligible to convert them in the future for common at $22 a share if that is what you wish to do. The angle that Vince says he finds attractive is warrants are attractively priced. It's going higher than the common stock typically. He mentions ICANN on CNBC saying he has made much more via holding warrants. And then, for example, by holding common stock. Do keep in mind, though, just as an example, that you can buy the warrants and you can trade them on their own because they have their own QSIP, as I mentioned. On the other hand, if you do convert them into OXY Common, or otherwise if you just own OXY Common and Occidental decides to reinstate a dividend, you would be receiving a dividend on common, but you would not be receiving a dividend on warrants. My dear friend from Germany, Dr. Matthias Kinke, sent a note and said, thanks for the insight. I see some strong and steady dividends are part of your criteria. Matthias, this is absolutely correct. I have some stocks in my portfolio that I view as foundational, which includes a couple of energy stocks like Enbridge and Pembina. There are also some of those in my financial portfolio, for example, TD Bank, which I mentioned. And that one specifically is one that Matthias looked up. And he said, it looks like a conservative stock. It has been rising steadily for the past 25 years. But I don't see a bargain in the price so far. So Matthias, if you actually go back to 2008, 2009, during the financial crisis, you will see that TD Bank was trading in the low teens at one stage, if my memory serves me correctly. So depending how long you've been in this position, you have not only benefited from the huge uptick, from a price of whatever you purchased it for during the financial crisis of 2008, 2009, 2010 to where the price is trading today, but also you've been compounding dividends at 4 or 5% on an annual basis. Matthias also mentioned there's some insider selling of 3.3 million shares, or sorry, Canadian dollars in January. It's not really material for a bank of this size. And these things happen, especially if you refer to it in January. I'm not sure what the purpose was behind that particular insider transaction, but not too worried about that because of the size of the actual investment and the size of the actual entity. Kevin Zhao said, I've been buying a lot of ET weekly on a weekly basis. Kevin, that's a great buy. I mean, energy transfer is cheap at the current price. I mentioned ET yesterday as one of my concerns. To be fair, if energy transfer pulls back a lot because they lose their court case this coming Friday, which is April 9th, I'll probably, back up the truck and pick up some more as well if the price drops to below my current cost basis, which is $6 and some cents. Hans and I had exchanged a few comments. Hans said, good idea, better idea, buy some more ET instead. So I just addressed that one. He says I was actually being serious. It doesn't seem like a summer to miss out on energy. I absolutely agree with Hans on that one. If ever I've seen energy stocks teed up nicely for a summer bull run, this is it. Given unforeseen circumstances, of course, guys, because you don't know when the next ship is going to get stuck in the Suez Canal, or a war breaks out somewhere, or there's a COVID-21, or whatever. Those are things we cannot control. Very briefly here, before I take you into my portfolio, Jean asked the question and said, what is your overall proportional exposure towards energy? I'm going to answer that one for you in a minute. Mike Smith said, I have most of the energy stocks that you have. Andy said, I have about 100 extra additional energy positions. I responded to Mike and I said, wow, you have a lot of energy. Crystal Clear asked me a question saying, do you also invest in other sectors? I replied to that one and said, yeah, my second largest holdings are financials. I'm going to show you that in a minute if you stick with me. And then Jude, I had to add this one in from Jude Zhao. He says, thanks for sharing your favorite pizza flavors. The mixed flavored pizza looks delicious. More cheese, more pizza. Well, I don't know if there's going to be cheese in these colors, but what I want to do is take a few minutes and actually show you the balance of my portfolio. And we can talk a little bit about rebalancing here, because in this particular video, I'm not going to talk about tax harvesting, and I'm not going to talk about creating a tax event, because I am not selling, I will be buying. So as I showed you guys yesterday, these four energy stocks that are kind of grouped together here, and I've kind of changed the pie chart just a little bit to change the layout. Energy Fuels, GoVX, Cameco, and Paladin are my uranium energy plays. Together they add up to about 20%. I mentioned Total yesterday. I only have a 7% position in terms of my total energy position. So maybe I can add one Maserati there. And I also only have 10% energy transfer in my current pizza pie. So I could possibly add another Maserati there. I'm okay with Pembina and Enbridge at around 20% where they are right now. And for what it's worth, I'm also okay with OXY currently sitting at almost 29 or 30% of my portfolio. I might be tempted to trim a little bit of OXY, but it takes a lot for me to actually exit all or some of the position that I'm in. Although I have explained before that I sometimes exit position using a trailing stop. And let me just briefly touch on that one. If I am up 50, 70, 100%, I may plug in a 10%, 20% trailing stop. And if that stock does pull back 10 or 20%, I'll cash out and take my profit and invest it in something else. That is actually how I came about opening the position in energy transfer and my uranium stocks, because I cashed out of a position on Pfizer doing what I just mentioned a minute ago. So let's take a look at my financials over here. My largest holding by far is TD, and that's the one we talked about earlier when I referred to Matthias Kunker's comment note to me. My second largest holding is actually one that I didn't mention, Matthias. It's Sun Life Financial. Bank of Nova Scotia, comes in at about 20% as well, and so does AllianceBernstein. But I like AllianceBernstein a lot, and I might add another Maserati there. So depending on the way how things go, I might look to add something there. Also, I hold a little bit of Wells Fargo. I bought it just because it was super cheap, and it would have been too good a deal to pass up on when Wells Fargo traded below $20 a share, with the entire market cap of the major bank just collapsing to less than a third of what it traded at just 7-8 years ago. But that's kind of a quick look at the pizza pie of my financial stocks. I did dive a little deeper into these, and they go across the screen sort of in similar order here. I got TD Bank, Bank of Nova Scotia, AllianceBernstein, Sun Life Financial, and I know I cut off my other holding there, but ignore that one for a second anyway, because that's Wells Fargo. Let's take a look at the things that are actually interesting on this particular slide here. I am willing to add another Maserati to AllianceBernstein. Its weighted alpha right now is 113. In terms of today's opinion, I do not care too much about the analyst's opinion, but you will notice that the opinion is 100% buys even on Wells Fargo. The change over the last 6 months, for people who think financials have not moved much, these are large entities, issuers that are worth tens of billions of dollars. TD Bank over the last 6 months is up 41%, Bank of Nova Scotia 50%, AllianceBernstein 52%. The other reason why I like AllianceBernstein is because they pay a dividend of almost 8% currently on an annualized basis. Sun Life is a bit of a laggard here. They pay a larger dividend, but they're only up 25%, and Wells Fargo has recovered some. It's up 68%. Why wouldn't I buy Wells Fargo? Well, currently its price earnings ratio down here at the bottom of the screen is 71. I wouldn't enter a new position. I might add to an existing position when it has a high PE, but I wouldn't in the case of Wells Fargo. So Wells Fargo for me is not a buy, regardless of the analyst saying it's 100% a buy. How about my other stocks? So I have a variety of other equities in my portfolio. HR and AGNC are REITs. They're high dividend paying REITs. This is General Electric. I could add another Maserati there. This is ICANN Enterprise Partners, so I could add another Maserati there as well. I like ICANN's investment style. I like what he's doing, even though he has sold your favorite stock and mine, Occidental. VYM is an ETF, and so is SPY. This gives me a little bit of exposure in areas where I do not hold equities, like, for example, in the pharmaceutical industry right now, I do not have any pharma in my equity portfolio as a direct holding, but VYM and SPY do hold some equities related to industries where I'm not invested. So, for example, great companies like Johnson & Johnson and Pfizer and that are in these ETFs. And then I have 3M as well. It's recovered nicely. This stock went down from about $200 to about close to $100. So it lost almost 50% of its value during the COVID crash. But it's recovered some. And right now I'm actually in a gain situation with 3M. And I did nothing there. I just held it. BCE is Bell. It's a technology and telephone company out of Canada as well. And I hold BCE also as a foundational stock just because it pays a high dividend. So this is what the whole picture looks like, guys. And effectively, this is sort of my pizza pie of all my holdings, which includes all the ones I just mentioned a minute ago. So I'm not going to bore you with any more details. But this actually gives you a breakdown in a slightly different percentage kind of setup, because now you see that Occidental, for example, is about 10% of my entire portfolio. So as you kind of browse this wagon wheel or pizza pie here, you'll see I've only put one X in one particular slice of my pizza. And by the way, I cut it into extra slices because I'm hungry. But on the cash position right now, I'm at 13%. I generally try to hold cash, and I generally try to not have more than 10% in terms of my holdings in cash at any given time. So effectively, what I have right now is I have a little bit of spare cash. I don't intend selling anything, and I can apply some of that spare cash to potentially add to some of the stocks where I am prepared to make an additional investment. So I mentioned a few of them, one being Energy Transfer. I'm not too sure I would add right now to Total. The last time I added to Total, it was trading at about $38 a share. It's currently trading at about $48 a share. It's okay in terms of where it currently is. I may be tempted to add some more to ICANN. I can add to that position. So that's a possibility for me. I'm not sure I'll add a Maserati, but maybe I'll add a hubcap or something like that to that position. On the financial stocks, the only stock that I hold where I would currently potentially look to add some to my existing position is perhaps Alliance Bernstein. I like that one. So guys, that is my entire portfolio, and that's sort of what it looks like. That's the pie chart, that's the wagon wheel, and it shows you everything I have. And I've given you some of the underlying reasons as to why I would buy it or why I would just hold it. So Matthias, specifically to your question, um, we talked a little bit about the banks, and I'm going to wrap it up here with this one. I mentioned in my comment to you that I like the Canadian banks. Canada has 5 major banks. They have TD, which stands for Toronto Dominion. They have Bank of Nova Scotia or Scotia Bank. Those are the 2 I hold. They have Bank of Montreal. Bank of Montreal, ironically, is headquartered in Toronto, not in Montreal. They have CIBC, which is the Canadian Imperial Bank of Commerce, and they have Royal Bank of Canada. Those are their 5 major banks. So Canadian banks are sort of safe from the point of view that they only have 5 major banks. So if you think of it from a too big to fail point of view, you could say, you know what, if one of the Canadian banks were to get into trouble for whatever reason, the federal government of Canada would probably want to bail them out. I mean, they only have 5 banks. So you got to take care of your assets, and those banks are great assets to Canada and the Canadian people. So my addition there in the financials would just be Alliance Bernstein. That's one area where I might add. So my energy pickups, energy transfer possibly. Yeah, not Total. I'm not selling Oxy. So that's not happening. On the financial side, I probably will add a little bit to I would probably add a little bit to Alliance Bernstein, and on the other, as I sort of termed it, just grouping them all together, I might add a little bit to my positions in General Electric and Icahn Enterprise Partners. So that's, guys, that's a wrap. This is Mr. Oxy saying, keep safe, take care, stay away from COVID, and I'll see you guys soon. Thanks for watching. Bye bye.